Mumbai has been grappling with a sudden dip in gas supply due to a third-party damage in the main gas supply pipeline of GAIL. To understand what the current situation is and by when normal supply can be expected, we are now joined by Ashu Shinghal, the Managing Director of Mahanagar Gas. Welcome to the show, sir. Let's start with the recent gas supply issue. What are your initial estimates suggesting what could be the volume impact that could come in for Mahanagar Gas right now?
Normally, we sell around 4 MMSCMD in Mumbai and nearby regions. So around 50% supply used to come from this particular city gate station. However, we have recouped some of it from the other city gate stations, which is in Savroli and Mahape and other places in nearby Mumbai. So around 40% volume loss for particular day has perhaps impacted.
And sir, how long will it take for the supply to come back to the normal levels?
The incident happened on Sunday first half, and Sunday afternoon onwards, the supply was not available from our Wadala station. So we had to shut down some of our CNG stations. So around 390 stations are there in and around Mumbai, out of which 160 were shut down. So 230 were operating. So 40% were shut down and 60% were operating. Industries were asked to switch to the alternate fuels, and commercial and domestic pipe natural gas to the households were not interrupted, and it was not uninterrupted supply was given to commercial and PNG to the households. So the likely time is expected to be today noon. That means Tuesday afternoon we expect normalcy to start. GAIL has already isolated the section, and we are also there. So the pipeline section is getting replaced, a small part of it. And after that is completed and completion of some tests, we will be able to start the supply by today afternoon sometime.
That's a great news, sir, given the fact that it will come back to normal by today noon. Now shifting focus to the second quarter number, Q2 numbers were impacted owing to higher gas cost, which was not passed on to the consumers. Firstly, why did the company refrain from taking price hikes? And secondly, have gas costs come down in the third quarter of FY26?
It's not correct because gas cost has gone up, yes. Margins have come down slightly. But if you see H1 versus H1, the 10 rupees EBITDA per SCM has been maintained year on year. Q2 was slightly lower, but we expect Q3 and Q4 to recoup some of it. And anyway, we were operating earlier, maybe if you see 2-3 years back, our margins were in the range of 6 to 7 rupees. So one exceptional year was there when margins grew to 13 rupees, then it was again to around 10 rupees. So 8 rupees Q2 and H1 is around 10 rupees. So it's not very low as such. But yes, Q3 and Q4 we expect because the crude prices are slightly low, the Brent is low. And most of our gas is coming from Brent-linked contracts or indirectly through the crude-linked contracts. So we expect this Q3 will be better off in terms of procurement cost. And we expect margin to be in the similar range. Earlier, we have given a range guidance of around 9.5 to 10 rupees or so. It can be slightly lower, maybe 8.5 rupees to 9.5 rupees, somewhere in that range. But the volume growth is happening, which is a good sign. 10% half-yearly growth has happened.
Now, in past, we have seen that the company has taken several price hikes and never we have seen any impact on the volumes coming in. Then why this conscious effort now on volume rather than maintaining margins?
It's not exactly this way because what happens is that some of the customers at the time of buying the vehicle, they are very conscious about the price of CNG. So we have to maintain some delta with diesel as well as petrol. And yes, you are right. Some of our customers are inelastic in nature, but again, the customers are very conscious about cost and the economics which it works out. So, I mean, it's if we are having normal margins and if we are having procurement costs under control, so it will be taken as a management call that what is the right time to pass on the price or to absorb some of the price and maintain reasonable margins.
For first half, you did meet the volume guidance of 10% that you had given earlier. And given that second half volumes are usually better, are you being conservative with maintaining the 10% volume growth guidance?
We don't want to overcommit and underperform. So we expect maybe 10% guidance is the right way to look at H2 also. But you are right, H2 is typically better than H1.
Also, you have lowered your unit EBITDA guidance by around 0.5 SCM, not big number, but any chances of further reduction in this guidance number?
We'll see at that point of time because we don't know how the market behaves, especially in the winters in Europe or such countries. And sometimes we have seen that if it is a muted winter, the price, and also sometimes if the oversupplied LNG market is there, then price hike is not to a great extent. Plus, our portfolio is now very much linked to crude also. Around 60% or maybe 70% volumes are coming directly or indirectly linked to the crude. So winter gas spot prices, we don't have much exposure, which is the one which gets impacted because of winters. So we don't think much of price impact on that account is expected to be impacting our prices.
And sir, lastly, what has been the monthly run rate of CNG vehicle additions in the month of November? October, I believe it was very strong at around 10,000 vehicles, right?
We are in discussion with BEST and let us see that what best can be done because the BEST fleet size has come down since last 7-8 years. So we are in constant touch with them. Regarding MSRTC, yes, they have picked up some amount. Around 600 buses are running on MSRTC. Plus, the volume, both these put together, is around 7% of the overall CNG volume. So we think it's not a very substantial number, but it is an important sector for us. And we are seeing what best can be done. We are also in discussion with NMMT, NMC, and TMT, as well as some private fleet operators to see if we can get some conversions on CNG. Very recently, we have also launched our CNG Mahotsav plant on B2B segment. The more number of buses, if somebody takes or commercial vehicles, then we give some discount on the capex, not on the capex, as a fuel card for running the vehicles. So that scheme is again launched. So we expect some numbers to come from that side also.
Thank you, sir. Thank you for joining us and explaining the way forward for Mahanagar Gas.